What's up, guys? I should have my mic fixed, so that's kind of nice. Let me know if it's fixed. If it's not fixed, that's an issue. But yeah, I got a new cord for it, so we should be good. Anyway, today is November 8th, 2025. We're gonna be looking at price action and reviewing the past week in detail. If you guys like these type of videos or live streams, definitely consider leaving likes, subscribing, following me on X, and joining my completely free Discord.
Jake, it's me.
The link's in my bio. Yo, what up?
I'm up on the live.
Okay, it just got on. It just started.
What is up, guys? It is Ethan today. We're gonna be trading.
You gotta switch the camera for them.
Okay. We are gonna be trading
Do you know what this is?
stocks today.
No.
And
no.
so as you guys can see here, there's a lot of
It's
green.
not stocks. No.
Okay.
No.
Okay. Nasquik. Mini futures. Mini futures.
Futures.
So do you guys know what that means? Because I don't. But
I'll tell you what it means.
so as you guys can see here, the red is bad and the green is good.
No. It's not.
Actually.
No, yeah, you can make money if it's red. You
Oh.
can make money if it's green. If you sold and it goes down, you make money.
Who's Opa Momo?
What up, Opa? How's it going?
Hey Opa, how's it going, guy? Dude.
So, bro, if you go like this, you sell here, and then you buy down here, you profit the difference. So you profit. So you risk however much is in this red, and you make however much is in this green. So you risk. Let's say this was $100. You risk $100. You sell here. If it goes here, you make $600.
Oh wow.
So it's not red as bad. It's not.
Can we do
crazy.
another trial trade again on
Market's
here?
closed.
Dang
Saturday
it.
night.
Okay, dang. So is this a recap of the market last week?
Yeah, we're just looking at the market
Okay.
the past week.
Wow, it's interesting. Whoa, look at that high.
What?
Look at
The
that.
gap?
Yeah.
The void? Yeah, so the interesting thing about this void is when the market will leave these voids, a lot of time, it's going to want to rebalance to it, meaning it's going to want to come back to it. Check this out, right? I draw this out here. What happens? We come back to it and fill it, right? See that? Isn't that kind
Wow.
of cool?
Why are your arms in the way? Wow.
So that ended up being where the market
What's
wanted to
this
go.
little... Oh, it disappeared. I had this little blue thing here.
He's my sister's boyfriend.
I'm his friend, too, though.
Yeah.
We're basically brothers.
Yeah, basically. And then, but there's an even more powerful version of this, and it's actually called it's an overnight gap.
Okay.
So you basically turn the chart settings over here, like this, from this to this, and these are even better. So see how when the market leaves a gap, it just comes back to it
Oh, wow.
and fills it perfectly.
That's so cool.
So market leaves a gap, comes back to it, right? Boom. Leaves a gap, comes back to it. Boom. Leaves a gap, market comes back to it. And it's constantly making these overnight gaps and then filling them. Do you know why? Why does the market come back and fill overnight gaps?
Because the market needs to continue to be profitable.
I mean, that's an interesting way to explain it.
Yeah,
but
okay,
it's
okay.
kind of like that. Yeah, it's
Oh, actually, okay.
That's exactly right. Actually, it's
Oh, wow.
exactly right.
You guys hear that, chat? I was right. I was
but
correct.
the way you explain it, I'll
That's awesome.
explain it in more
Okay.
detail. It's seeking to be creating as much panic as possible. It's seeking to basically make the most people lose as possible. How does it do this? Well, the thing is, the overnight price action, there's not as much traders in the overnight price action as there is in the highly liquid New York price action. So these green candles, there's going to be a lot of traders that traded within here, not so many traders that traded overnight. So what's going to happen is the market's going to cut through these gaps to go stop out the old people in this old New York section right here. and then it's going to do it again. It's going to cut through the gap to stop these people in this New York session. So they
sorry,
lose.
I have a question. So when
Yeah.
you're trading live, right?
Mhm.
This thing's going fast, right? How do you catch that in time?
Well,
I feel like that's like the biggest headache.
You're like the 4-hour chart right here.
Okay, let's look at the 30-second.
Yeah.
So this is what it looks like for you when you're trading.
Yeah, I mean, I'm only trading 30-second if it's like I know the bias and I know the clear.
Okay,
It's the setup.
12 minutes.
No, that's 12 months.
Oh, wow. Look at all that green.
But yeah, it's kind of cool.
2 hour, 4 hour. Wow. It's
I'll
actually really fun to press around with.
I'll have to show you some more stuff another time, but
Yeah, dude. Anyways, I'm not going to try to distract you guys from learning, but Jake Trades It is the best trader out here. I'm being honest with you guys, so you guys better keep listening to him. All right. See you guys.
I appreciate you. Ethan. Thank you.
Yeah.
All right, guys, let's go. Let's back test. Here we go. Reviewing the week. So yeah, we got a lot to review. Should be interesting review session here. Once again, the mic should be working now. Let me know if it is. Let me know if it isn't. If it's not working, that's an issue because it should be working. I'm gonna be listening to music as always. Highly recommend you guys listen to music as well. Yeah. I mean, I wish I could play music for you guys, but I'm gonna get copyrighted. So yeah. Anyway, we're going to be looking at what happened this week and kind of breaking things down so hopefully we can understand it. So, with that, let's go ahead and jump right into it. So, man, it looks like essentially what it was a classic expansion week to the downside, right? We had a open here, right? The market opened here. So, here's the weekly open. Right? We push up. So this is Monday was manipulation. And then we use this gap here. So this is a reclaimed fair value gap. What is a reclaimed fair value gap? It's when we have a fair value gap. It's already been used, right? This has been used once already. Now, we love that. We love that. A reclaimed fair value gap is we have a gap that was already used once, and then we come back and we use it again. So 1 hour reclaimed fair value gap. So we push up into this 1 hour gap. Let me show you guys weekly profiles, or the weekly profile that this likely was, right? And if you think about it, as I always say, right? Anytime there's aggressive, fast price action, treat this as like a liquidity void, right? And so now you start to see like, oh, imagine this price action's not here. Oh yeah, we just wanted to come back and stab this old price action. Where was the liquidity pool here? Right here, okay. So this was a draw on liquidity. And where did we go? We went to it, right? So yeah, all this treated as a void, treated as if it's not there. Week opens up, manipulation, distribution. Skipping that song. Alright, so giant void up. We have a giant consolidation here. What's this gray box I have marked out right here? This is just where the most transactions occurred within this consolidation. That's what I use this tool for identifying basically the hot spots, like where are there high transaction areas, because I know that where there's transactions, that there's likely stop losses. That's the logic behind that. All right, so liquidity, I call those liquidity pools. So liquidity pool, we ended up drawing down to that. We come up, use this 1 hour fair value gap. and it's a classic bearish expansion weekly profile. Hang on. So yeah, here we go. Classic expansion week bearish. You guys seeing it? So the market opens, we get manipulation. Push up into this 1 hour gap. Once again, what does this say? We're looking for essentially a 1 hour or greater premium discount array. You can see that's right here. So 1 hour. It's a reclaimed for value gap because we've used it once right here, and then we use it twice right here. I'm actually curious, do we have a statistical manipulation level do we hit? Oh wow, that's so sick. So it lines up perfectly with statistics, guys. Check this out. Statistical weekly manipulation level right there. So now, where do we go? The statistical weekly distribution level, which was the actual first spot that we went to. That's crazy. So, I'm not gonna lie, it had the potential to end up reversing here. Instead, it continued lower. This is very interesting, guys. Things are getting more and more interesting as we keep going forward. This is very, very cool, right? So this is the statistics on a weekly candle. If you guys don't know what this is StatMap. Highly recommend checking it out. Follow Joshu. He's the guy who made it. Man, right? So repairing StatMap with so this is statistics on a weekly candle. On a red week, statistically we go here, we distribute here. Do you see how this is valuable to frame our weekly profile, right? 1 hour for value gap, push up into it, weekly statistical manipulation level, weekly statistical distribution level, liquidity pool down here. So let's go ahead and screenshot this. This is pretty cool, I'm not gonna lie. But things are just getting started. We're gonna keep going, we're gonna keep learning. Oh, let's also Alright, let's make a new folder for today. 11/8/25. Saturday. Bearish Classic Expansion Week. Imagine if you could just have someone tell you the weekly profile before the week starts. You know how OP that would be? Let's see if we had the true open make any sense. Oh wow, we went straight down right at the true open. It's interesting. Okay. So what can you do with a... We should shorten reclaimed. Well, or we could just do RFVG, so it's a reclaimed for Vigap. So we'll just call it an RFVG. I like that. And then if it's like the supercharged gap, if it's used 3 times or more, I'll call it SVG. I like that. So week opened up, push higher. So we have a 1 hour reclaimed for Vigap. This whole thing is void. Then what? Wow, this is sick. What happened next? First we have midnight, right? We're above midnight. Wow. These markets are perfect, dude. What the heck? So we have midnight, that's true open. Then we have 7:30 true open here. And then we have 9:22 in here somewhere. And then that's exactly when we get that final manipulation, right? Right there. Yeah, things are getting real interesting. So we sweep out essentially these highs with this Judas swing here. And then we have an internal sweep here. And then there's a 5-minute change in state here off this 1 hour gap. Let's get rid of weekly open. We kind of already know that that's a thing. Perfect. How perfect is that? And then inducement of this high above the change in state. You wonder why we went lower right after that. Oh, this is low resistance. Hey, what up, Mom? Is your channel monetized? I got super chats. I'm not getting the other thing yet. The what's it called? I got super chats. I did not get. I'm still working on getting the watch. I think it's called the watch page ads. That's what it's called. Just like the regular ads. Getting paid from regular ads. So, but work in progress. But I'm getting closer. So I got super chats, and that needed 3,000 valid watch hours, and the other one, the regular monetization takes 4,000. So I think I'm at like 3,100 and something. So I'm getting there. I'm getting closer, which is exciting. So yeah, we use the gap once, twice. We go perfectly to the statistical weekly manipulation level. Manipulation occurs when we purge this high above all the true opens in this 1 hour reclaimed gap. We have a 5-minute change in state right here. So this is how you could take a trade to get on side with the weekly move. Was to induce this high. Wow, you'd have to enter right at 1605. So I don't know how realistic that is, but man, I want to clean this up because it's kind of messy. Let's just make this one liquidity sweep. And then maybe just instead of doing that, I'll just do like that. Now let's just try and simplify this to not be crazy, because I like keeping things simple. So statistical weekly manipulation level, 5-minute change in state. What is this also? A 2022 model. You see how we come back to equilibrium above 730. Boom. Delivery lower. So we'll mark this out as a flow state inducement, and then we're going to save this. So I would go like that, stop loss there. You could have even a tighter stop loss, but it's not required. And then 4 projections. And then where else do we go? 7 projections. Perfectly. It's crazy. Then you could have kept holding is the crazy part. Sorry, I'm texting someone back. What a sick trade, and then we go down. Okay, let's save this as 16:05 on Monday, right? $16:05 flow state inducement 1 hour 5 minute. And then we continue where? To the 7th projection. That's the next low that we go to, right? Check this out. We go to the 7th projection right there. So I drew this out kind of bad. Hang on. Alright, here's the second screenshot. 16:05 flow state inducement 1 hour 5 minute number 2. And then let's say you were a DGen, you saw the weekly manipulation level got hit, and you're like, I know the weekly distribution level is gonna get hit. You send it. How far does that take you? Stat map is OP, guys. Everyone get stat map. Stat map is OP. Alright. So this is the third screenshot. 16:05 flow state inducement. The reason I'm calling it flow state inducement is if you entered on the retest, you'd enter at that initial one. I'm waiting till after we induce it into the change in state. Number 3. Alright. I think we take a break. That's such a clean trade, honestly. Let's see if anyone's watching. Three watching, let's go. Okay, I'm gonna take a quick break. Yeah, guys, I really am trying to get better with doing the short form videos every day and the long form every day. It's not easy, though. It's not. Yeah, I mean, you can't argue with the precision here. Truly insane. I just want to focus on stat map and this reclaimed gap. And then maybe if there was like a reclaimed gap or anything. I mean, I already know. If there was like a 1 hour hidden SMT or something. And if you guys don't know what I'm talking about, yeah, I've never talked about hidden SMTs before, and I don't know when I will make a video on them. Probably when I decide that I think they're useful, but I think they're useful, but I just want to learn more about them. But yeah, this is really fascinating. So that we got more to look at, guys. What happened going into Monday? Monday consolidated. See this? Monday consolidated. We had this 1 hour bearish gap. And essentially we form what's like traditionally like a traditional retail wedge here, right? It's kind of, you know, cool how it did break out one way and then we ended up going that way. And then yeah, we break. This is how probably like Tory trades, but when you get the break in a certain direction, you can enter that way. I mean, hey, I'm always up to, you know, learn, and clearly this type of trading is valid. So but yeah, basically a wedge, weekly manipulation. And then I'm just gonna call this a Tory, just like a Tory break. So instead of like a CISD or anything like that, I'm just gonna call this Tory. Oh my gosh, I don't know. Right? That's kind of how I see it. And yeah, that might not be how Tory trades. I really don't know, but it's interesting for sure. Anyway. Should we look at low time frame price action? Maybe starting with Monday. Yeah, so we had a 2022 model. I remember this. In the morning on Monday. It was nice. Yeah, check this out. This is brilliant. This is about as simple as it gets. We have 7:30 true session open. We have 7:52. Note when 7:52 happens, right when we start the manipulation. So both of those. So what do you guys see here? What do you see? We have accumulation, we could actually do a range projection of this. Oh man, it would have been cool if it did line up. I guess if you mark it out like that. Nah, I think it's not. It doesn't fit. Unless maybe you mark it out like this. Nah. And then I think we got SMT. We did. Can I teach BOL profile? Wait, BOL profile. What does BOL stand for? BOL profile? And then this is a volume balance at the bottom. It's just perfect, guys. Check this out. Right. So liquidity sweep, right? And volume. Oh, can I teach the volume profile? Of course, bro. Yeah, I'll do that. I'll do that right now. So basically, the way I use volume profile. Let me lock in for a second. The way I use volume profile is to tell me where the majority of transactions happened within any given range of price. Because why do I care about that? Because common sense, guys. Where there was transactions, there's going to be people that entered the market, and where they entered, the market's going to want to seek back to where they entered to stop them out, right? It's basically seeking to where the transactions have already occurred to stop people out in that range. So when you get the volume profile tool, you're gonna have to favorite it, get it on your toolbar, but it's called fixed range volume profile. You're going to get it on your favorite bar or whatever, and then basically you might need to adjust the settings. So this is what my settings are for it. So I'm pretty sure this gives you the size of each row. So I think there's 250 rows. And then this, so what I do, so the white line is basically the point of highest volume or something like that, right? It's basically the point of, it's called the point of control, but in my opinion, it's like the point of most transactions, where basically, it's like the center of gravity, pretty much. It's the center of gravity of the solar system, right? The market's gonna want to come back to that center of gravity. So when I draw this out, the center of gravity is here, and then I basically have it set to 20. So that's basically saying the middle 20% of volume all occurred right here. So that means 20% of the transactions in this entire range all occurred within these two price levels. What does that tell me? That tells me that that's a hot spot for where people entered the market. The market's going to want to seek back to that hot spot to stop people out. That's the logic behind it, right? Where there's a high degree of transactions in a specific range of price, the market's going to want to seek back to that specific range of price to stop people out. It's just AMD, right? The market's running through old highs and old lows and consolidations and old accumulation ranges. So what I'll do is I'll just mark out a box like this, basically anywhere in these two blue lines. I'll drag it over, and then boom, marker comes back to it. And you just have to mess around with it and see how well it works, but it's pretty nice. Like it's gonna really describe a lot of precision elements of the market, like even on the high time frame, like you just kind of have to mess around with it, but you'll find that like a big reason why we end up coming back to a specific spot is just because, well, there were a lot of transactions there. Like this specific high right here, well, it was a high transaction area, and you're just gonna have to mess around with it, but watch my video on it. I made a video on it a while back, and I think it's super helpful. So, but yeah, hopefully that helps. Yeah, of course, bro. And I have a short form video on it. I highly recommend watching that. I explain it. But that's the way I use it. That might not be the way other people use it. But I use things that make sense to me. So that's how it makes sense to me. So. So, accumulation, manipulation here, below all the true opens. We could go down to a 22-minute cycle. Probably be worth it. I'll probably do that in just a second, but first I just want to show you guys, this was a very realistic trade to catch, right? We had a liquidity sweep, so a sweep of these lows over here. So accumulation, manipulation, liquidity sweep, break of structure, right? And then we have a fair value gap that forms after we break structure. What is that? It's the 2022 model, right? So this was a very, very nice trade. We're below all the true opens, right? We're below 7:30. We're below, I guess we weren't below midnight, but it doesn't matter if you're, I mean, it's a New York session trade. And then let's see if there was a 22-minute true open. Yeah, so 8:21. So yeah, we're below every single true open. Do you know the vid title? It's a short form vid. Yeah, it's a short form vid. It's called How to Identify Liquidity Pools. It's a short form video. It looks like this. How to identify liquidity pools. It's yeah. It's a ways down. But yeah, I go over how I use it and everything. So it's a short form video. How to identify liquidity pools. Yeah, this was so clean, guys. This is so clean, right? We sweep out the lows with SMT. We break structure, form a fair value gap at equilibrium. Yeah, of course, bro. Right? We retrace back to equilibrium. So this is a fair value gap. We induce the low. And notice how there's a volume imbalance right below the low. Oh my gosh. If you ever see a volume imbalance at the bottom of a 2022 model below an old low, full port that bad boy, bro. Don't full port anything. I'm just kidding. But guys, those volume imbalances at the bottom of 2022 models are like, especially if you're inducing a low into them, it's like, oh my gosh. Like, this is just beautiful. Beautiful, guys. Check this out, right? So anytime there's a volume imbalance at the bottom of 2022 gap, I call it the vulture gap. Inducement. So liquidity sweep with SMT. It's about as textbook as it gets. Accumulation. Below all the true opens, liquidity sweep with SMT, break of structure for value gap. We come back up, induce the low into the volume bounce, and then boom. And then we could go like this. We could project out this order block here. So there's 4 projections right there. There's 7 projections. You could pretty comfortably target 7 projections and get away with it in this specific scenario, I would say. But I would also scale out, as always. So this was on Monday. I kind of already had this marked out, but yeah, I already had this marked out as a 2022 model. We're also going to save this as a vulture gap. So vulture model. This was on the 1 minute. So vulture model on the 1 minute, 829. Oh, it was a precision swing point? Holy. That's pretty cool. See how this is red? This candle's red, and then this 829 candle is green. It's a PSP. Just a little bonus. It's not even relevant, but it's a bonus. So 829 Vulture model on the 1 minute. Alright, let's go and save that. Alright, I might take another break. It's crazy that that was a PSP too. Digging into the Vulture imbalance. Oh. Alright, I'm taking a break. No one's even watching anyways, so it doesn't really matter. I can take as many breaks as I want. No one's even watching. think I'm gonna move my setup to be more of a chill stream, guys. I'm gonna set up in bed and stuff. So, but yeah, so yeah, this is basically I'm just saying we're gonna transition to more of a chill, laid back stream instead of a regular stream. I don't know. I just right now I'm just not in the mood for like up and active analysis right now. So, yeah. So I'm gonna switch the mic. And yeah, once again, watch it for as little or as much as you want. I don't really care. It's fine. Okay, I need to unplug the mic. I guess I could just unplug this. Okay. Okay, I'll start back testing again in just a second. So, I'm not going to be talking that much. I'll put a little note. And then we ended up getting this inversion back down. That'll be interesting to look at. I think it was also a change in state back down too. Yeah, we'll take a look at that next. Right, so this whole entire thing. So this is the liquidity pool right here. Mark it out like this. treat this as a void because it happens so fast. Like there's like no transactions within this. So then we sweep the data high. Wonder if there's a 15-minute Q level. Oh yeah, there's a 15-minute BPR. Dude, this trade was perfect. What the heck? Why was this such a nice trade? Dang, bro. It really was that nice. And then we get a 1-minute change in state with this giant range below. So yeah, you could just enter on the retest or the close. Honestly, either. I'm curious if we went to like and then stop loss. I put stop loss above the breaker in this case. And then target here. I'm curious if we went to stat map level. Oh my gosh. We did, bro. These markets never stop amazing me. That's the statistical opening range manipulation. Wow. And then we continue to the opening range distribution. Was it a macro? Oh, it was 936. Oh, that's right. I remember this. This was such a cool trade because this happened at 936, which was a 369 time. And then stopping above the breaker in that case. This was on Monday. I already have it, but still. It's also an inversion, but we closed a little too low. Let me go to the bathroom. I can't wait to have a Tesla. I can't wait to have a Tesla. I already know what Tesla I want. Mm.
Like if I ever stream London, the stream will probably look like this, and then I'll be like half asleep, and then I'll be laying like this, and then I'll see a trade, and I'm gonna be like, go, 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 shorts, shorts. And I'll go back to bed. That's the dream. That's how I'm gonna trade London one day. This IFG looks nice. Wait, this IFG is nice. Simple inversion here. I think Dodgy took it. We're gonna mark that up, but that's very obvious. I think PB Trading took that as well, actually. I think everyone took that. Yeah, it's a very simple trade. We'll get into that one next. Yeah, so let's see here. So I think it was just mainly just a sweep, not inversion. And then we continued lower. That's basically all it was. Continuation of right, because if this is accumulation, if this was manipulation, then we're in a continuation to those lows. So and it was at 1014, which is a 6. So Let's look at 10 a.m. 4-hour power of 3. Because 10 a.m. opened. When you look at it like that, this was a really good trade. So yeah, we did actually manipulate 10 a.m. there. And then went lower. Not quite to the statistical manipulation, but still. Yeah, I'd probably just take it like this. That's 2.5 R? Dang, bro. Such a simple trade, but so effective. 2.5 R. And why was this good? Because higher time frame was expanding lower. And we'll also mark out this happened at 10:14. Imagine if I could just catch all of these every week. I wish. So 10:14 inversion for value gap on the 1 minute. This is a 6. Okay, I need to get my AirPods. They're charging right now. Seems like 8 a.m. has been having so much opportunity lately. It's crazy. I want to look at this. I want to look at this. There's so much to look at. And I want to look at this. Dang, bro. Okay. We're going to look at this next. Yeah. It's the most obvious 30-minute CRT I've ever seen. This is on Tuesday, right? Yeah. Hey, what up, Javier? Nah, I'm not talking that much right now, so just charting, listening to music, and just doing my own thing, I guess. I'm not here to try and impress anyone or make it interesting. This is just raw backtesting footage, so, yep, just chilling. You just watched the starting part of the stream. Yeah, that was funny, huh? I mean, it's just like, it's what everyone thinks. I mean, it's kind of interesting, though. It's not necessarily true. Yeah. Now we're gonna take a look at the 15-minute, 1-minute cell model. Yeah, so this is a very interesting situation. Where do you guys consider the CASD here, right? That's the question. Where do you guys consider the CASD? We have a 15-minute for value gap. We initially had 1-minute change in state here. I would have gone break even. Would have been break even. But now we have a rejection block. And now all of a sudden, this rejection block rejects price. This is Phoenix model, by the way. Where would you guys consider the CISD? I don't know. I know this doesn't look like a conventional CISD, but like maybe take it like this and mark the CISD like this. Or maybe, oh, I know. We align the 15-minute with a inversion, right? We're basically aligning 15-minute for value gap with a 1-minute inversion here. And you can just tell we're going to go run liquidity. It's obvious. Then all this void. Yeah, I like this. Once again, using 2 candles as one, merging these together. That's how you get that inversion. And then all these lows, low resistance. We might need to remeasure this out. Yeah, look. There we go. And now you can see that that was way more accurate. So, something like this, all the way down to that liquidity pool. And then what I would do is, so this is flow state using an inversion. What I would do is I'd probably go like TP1 and break even. probably say you could go break even like here. And then like TP2, I guess like here. And then it's just how I would do this. And then I just scale out, right? And then final TP would be in here. Final TP would probably be like here. I'm just being realistic, right? We could even mark out the void like this, and now it becomes even more clear, right? Okay, this is what I would do. What time does this occur? 10:45. And I think there was S&T. Yeah, there was S&T right here with the rejection block. So we're delivering from a Phoenix model. Now that's a nice trade, I'm not gonna lie. We'll mark out this as two different versions of the same trade. So 10:45 is on Tuesday. So we'll mark this out as flow state close, 15-minute, 1 minute, and then I'm gonna put in brackets IPG. And then I'm also just gonna mark it out as an inversion for value gap. Jill, I just explained to take profit. I just explained to him how to use it, like 40 minutes ago. Scroll back in the video and you'll see me explaining it. Go back, scroll back in the video, like 40 minutes, and you'll see me explaining it. But I can explain it just really briefly. But like, it's not gonna necessarily help you identify which breaker block or order block to use, but it's gonna help you figure out the draw on liquidity. That's what it's gonna do. It's basically gonna tell you the draw on liquidity. So where's the market drawing to? Well, there's these high transaction areas that are going to be drawn back to because that's where a lot of people enter the market. That's where people are going to get stopped out. That's how I use it. But yeah, this was nice. Just a nice 1 minute IPG there, merging two candles as one with SMT. All right, I'm gonna go another break. project this out. Probably would just take profit there, honestly. Okay. Oh, let's look at your opens. Crazy. It's like time and price just aligns like perfectly. Okay, we'll look at something else in just a second. What up, Gary? How's it going, bro? Dude, I appreciate your positive comments from my trade on Friday. Made me happy. I'm like, wow, Gary's being nice to me. Appreciate you, bro. Appreciate you, bro. Just chilling out, listening to music. Just back testing. So, yeah, nothing much. But I'm not talking really. Just kind of back testing and back testing and back testing. So, yeah. Bro, I just want the vest. I know. I know you do. I appreciate you, bro. I know you're trying to help me, bro. Appreciate you. Alright. Okay, what do we look at next? Man, there's never ending stuff to look at in these markets. It's crazy. This was obviously an inducement. It's probably like I don't even need to see anything. I could just tell. Alright, now we're gonna look at this. We're gonna look at this. So, what happened? Well, we had accumulation over here, manipulation. I don't know if it was an obvious trade though. But sometimes you can just tell when the market's been ranging and then it pops above an old high and there's a range below that it's gonna be a soup. And this is the perfect example of that. You see what I'm saying? Range, 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 range. Pop above. Soup. I'm not comfortable. Okay, I'm gonna readjust and stuff. Hang on. So maybe there wasn't opportunity here. I'm not sure. Well, I think there's always opportunity, but sometimes I just can't see it. Like here. Oh, am I dumb? Am I stupid? It was just a 30-second IVG, bro. Oh my, that's so obvious. That that makes me mad. No way. No way it was at 11:45. Wait. Nah, never mind. I thought that was a 369 time. Still though, this is nice. We ranged this entire time. Accumulation. We sweep the high. Like, guys, this is the type of trade, if you could just freeze time, and say, is this a good trade? You would say yes. 100 times out of 100 times you would say yes. Right? 100 times out of 100 times, if you could freeze time, look at this inversion, see how it's, oh wow, accumulation, manipulation, distribution, 100 times out of 100 times. This is a good trade. It just is. But it's so hard to catch it live because you have to be there at that exact moment. But yeah, this is very nice. So once again, you don't need to catch the soup. You just need to find an entry to get on side with the soup. Hopefully that makes sense. Like, this is the soup. We might not know how to catch the soup, but we can take an entry after we get the soup to get on side with the soup. So, first way you could take this is targeting that low. Then you could have also left runners. I guess that's up to you, honestly. I think you just take profit there. I mean, you could have left some, but I don't know. That's so obvious, though. That is such an obvious trade. Look at how we perfectly retest the IFG too. That's crazy. Just passing through, proud of the consistency. Remember, top-down analysis is king. It'll all be worth it soon. Thank you, Gary. Appreciate you, bro. I agree. I think you gotta always go top-down because if you don't, you're gonna get cooked. What time is it? What time is it, King? For me, 10:53 p.m. I don't know what time it is for other people, but I guess in New York, in Eastern time, so we're earlier, so in Eastern time, it's 12:53 a.m. That's crazy. Okay, I'm taking another break. I'm still taking a break. I might actually end the stream. I think I've had enough back testing for tonight. Thank you guys so much for watching. I'll see you guys in the next one. Peace out.